Alright, good afternoon everyone. This is Jared with SelfLiquid.com. It is a sunny, warm afternoon here in Fort Collins, Colorado, and first trading day of the week. And the market was down just about 1% across the board, or at least in the indexes. So let's open up with a look at the index cash or the nasdaq cash. As I just mentioned, it basically opened up about 1% down and then chopped around from there. You can see we basically have this doji candle today, and today's close put us right below the 34 EMA. And so going into last week, I got short both Amazon and Netflix. This is obviously kind of right in line with what I'm wanting to see. And I established those positions, mainly because the NASDAQ was running into resistance here, as was Amazon and really tech in general. So from there, let's go and just take a look at the S&P. So really the same story here. You can see that we're getting kind of this rounding top here after a massive move up. And so the idea here was that with earnings coming up with Netflix, I cannot imagine, even with such a nasty move down. It is, it has recovered significantly. I'm not expecting good things from earnings in Netflix, even if they have, from a fundamental standpoint, not just terrible news. Now, the S&P was down 0.5%, not as bad as the NASDAQ, but you can see here, really across a lot of the stocks we're going to look at tonight, on some of these shorter term charts, you'll see like on the 78 and 39 minute, we have these squeeze signals forming, and I think that's kind of gearing up for move lower here. So on the S&P, let's go back to the daily chart. You can see that kind of the area I'm looking at is going to be right around 2477. So between 2477 and 2468. So let's actually run just from this low to the high here. And you can see, that just kind of reaffirms that idea with just one more level coming in at 2476. So that really is the target here. We probably can see some pauses along the way, but I'm definitely expecting volatility to pick up this week. And with that said, let's take a look at the VIX. So you can see the VIX has started to turn up a little bit today after a nice sell-off. And I don't really trade any volatility products like this, like the VIX or UVXY. I think there's a few others, but you can see here the VIX is really a lot of times called like the fear index, just because when the VIX starts to gain momentum, that's typically when you'll see selling in stocks. So with the slowdown of selling over the last week or two, the VIX has kind of come back. Now you can tell that the bottom is sort of rounding here on the daily chart, and with my sort of a assumption that the selling is going to resume, you'd want to, or actually you'd probably expect then to see the VIX spike again. So if you do like trading that, that's something to kind of keep in mind, as I don't think we've seen the end of volatility by any means. So next on the list, let's go ahead and take a look at the FANG index here. Give me just a second. So this is just a composite of all the FANG stocks, and we're going to start on the weekly chart here. So if you haven't watched any of the videos I've put together, I've talked about this a little bit before, where you can see how from the left hand side here, I've drawn this kind of left shoulder zone, if you will, and we got just right near that last week without actually touching it. And to me, it's not perfect, but this could be sort of a head and shoulders setting up in the FANG index, which ultimately would result in lower prices if this plays out, with Head and Shoulders being basically a bearish pattern. Now if you jump over just to the daily chart, you can kind of see how the NASDAQ and most of the tech stocks look very similar for obvious reasons. And it today did touch sort of its 34 EMA. Now, you can't trade this. There isn't actually a FANG index product to trade. This is just something I put together. And you can see that there's still ways to go before it's run into just kind of the first level of support, which translates to lower prices in tech as a whole. So without further ado, let's actually dive into some of these tech stocks I've just been talking about. And the first I want to talk about is the F in FANG, so Facebook. So Facebook is the only one today of the FANG stocks that was actually up. It's actually traded like this a few times, where most of tech has been doing one thing, Facebook has kind of done the other. Now, in no way, shape, or form would I consider Facebook what the term honey badger in stocks, where it kind of does whatever the hell it wants. It's not one where I'm thinking, wow, Facebook is looking good long here. To me, we're nearing a spot. Today may even have been that day where we could have started to establish some short positions again in Facebook. I talked a little bit about this, kind of a micro tangent, if you will, on Facebook, and it was really just kind of my personal opinion on sort of just stuff I'm seeing from them that doesn't make me, as an investor and a trader, think too highly of kind of what they're doing right now, and just from their product line. So I don't know if anyone else has noticed these commercials or seen, Facebook sort of, I don't know if you'd call it their answer to kind of what Amazon and Apple and Samsung and a lot of other people have been doing for a long time with kind of, one-to-one video streaming and conferencing. So like FaceTime with Apple, Amazon's Alexa products. So they have a number of different things. I think it's like called the Portal. But just devices and, kind of services that have been offered for years now, where Facebook is brand new to the game. And I can't imagine that many people are just running out to buy these things. I mean, I don't know a single person that has one. And I heard really a good way of putting this was, do you really trust Facebook with another, microphone and camera in your home? And I think that was a really good way of putting this. So, I understand the idea of wanting to get into physical hardware, where Facebook has, primarily been just involved in audio or software, and I just don't think they got it right here. So I just don't see anything in Facebook that makes me want to, run out and, buy handfuls of this stock. The other thing to keep in mind is that their primary source of income is really ads, and there's just more and more competition in this space. And with regulations starting to kind of crack down, I just don't think any of this bodes well for Facebook long term. Their platform as a whole, I think, I just know a lot of people. Now, I don't know the numbers exactly. I haven't heard in a while. We'll know, pretty soon here with their earnings report. But I would have to imagine that their usership is actually slowing. I just know a lot of younger people are, have kind of stopped using the platform, moving over to things like Instagram and and others. But anyway, that was sort of this long kind of winded explanation why, from somewhat of a fundamental standpoint, I don't like Facebook longer term. They've had just this phenomenal run over the last kind of I guess just shy of a decade probably, but it's just one that I don't really have any plans to do anything with here. Longer term, I'm going to be looking for really just opportunities to get short Facebook as they come. So let's jump over to Apple. So Apple, like the rest of tech, was down on the day, and Apple looks like it's just gearing up for, another move lower. So cross below a pretty longer term level here. So the low from February, so February of last year, Apple has once again kind of crossed that area. We did break through that previously. So let me go and just clear those levels off. And, we'll be looking to go back to sort of this area that held around 144.48, where I ultimately think we'll probably test this 140.82 area in Apple. So let's get over to Amazon. So I am still short Amazon. That trade's working out pretty well. Up about $320 on the trade, so not too bad. Just sold spreads on this, so it's pretty easy to manage. Just sold call spreads, and you can see, very similar to the NASDAQ chart, came right into this overhead resistance. You can see with the Fibonacci levels, so from the high to low, a 50% retracement of that, and then from low to high to low, this 100%. So I'm looking for at least this to come back to around 1580. Now if it breaks through this, that opens the door for 1535. And with that 100% kind of symmetrical level, there's no reason here that, makes me think that this won't continue lower on Amazon. But, I am kind of going to just taking this one day at a time with the market being as volatile as it has. So just a couple more in tech. So let's go over to Netflix, and this is really the big one of the week. So Netflix has earnings on Thursday. You can tell really by just looking at the IV on the options this week. On Friday they were around 80, 85, I believe, and today they're at 101. So, great opportunity to sell volatility here. So with contracts expiring, now it is risky, so I will say that, is that with anything around earnings, it's sort of a roll of the dice in terms of direction, but I really do have, an overall short bias on Netflix. Now, I'm not going to be doing anything that expires this week, once again, just because you just never know. You could have an up move in Netflix where the following, week it just gets hammered, and that's actually kind of what I'm expecting, is that, we may see sort of a, an up move in Netflix, but I just don't think it's going to be much. I think it could be, something like 350. Now they are pricing in 30 points this week, and today we saw about 5 or 4.5. So a 30-point move right now in Netflix would take us to, if the high on Friday was actually the high, that would take us to about $300, where you can see this 382 level around 308 where this purple dotted line comes in. So that's kind of in line with what could happen as well. So I don't know, that I can't predict the future, but with Netflix, I do have call spreads out next week, and some longer term ones about 60 days out. So the ones next week, they will benefit from, some drop in NIV after earnings here with Netflix, and right now, like I said, I'm positioned short. So the next and kind of final one we'll look at in tech is Google. So Google, once again, I know I sound kind of like a broken record here, but really just, to kind of finalize that thought, if you will, on tech, is that, they all really act pretty much the same. They've all kind of had this nice bounce. But Google, closing now below the 34 EMA, that opens up the door to lower prices, from my perspective. So I really do think that we are in store for, selling this year. I read something interesting talking about how January is kind of the barometer for the whole year, where if January is up, that typically leads to higher prices for the rest of the year. And, obviously the inverse, where if January turned out to be a down month, that kind of sets a tone for the whole year. And, we've had a really good start to January. So it's really interesting just to see where we're about halfway through. I'm kind of curious, if we are going to close out January positive or negative. Feel free to drop some comments down below if you have any idea of, do you have a, opinion? Do you think we're going to be higher, lower? And if you have any opinion on Netflix earnings, please drop a comment in there. We will be watching that live, so if you don't have anything to do Thursday, come watch it live after the close with me. If you're enjoying these videos, please subscribe. It really does motivate me to keep doing this. So click the link below, and that's all I've got for today, guys. So join me live tomorrow morning to trade the open and tomorrow afternoon to trade the close. Otherwise, I will catch you on the next video. Take care.